Matt Zimberg and João Monteiro. Matt is from Optimus Futures, which is a US-based introducing broker that helps traders find the best trading solutions for the best possible price. Matt and his team connect traders with trading platforms, data feeds, and clearing firms. He set up the company more than 10 years ago, already having a decade of experience in the futures trading industry. Optimus Futures offer traders with a concierge service helping them to choose and set up all the components to trade in the market. Matt and his team help newcomers and educate them on the risks of trading and investing, and help professional traders and firms with customized solutions. João is the founder of Forexc, which is a CFD trading broker offering clients the popular MT4 and MT5 platforms to trade Forex, metals, indices, shares, and other CFDs with a variety of trading strategies. João set up the company in 2018 after several years of operational and management experience with the European brokers, primarily in Cyprus and London. And I believe he also has a fund management, investment management company, Octopus, but it's an interesting 8T Poos or something like that.
Yes, correct.
I'm sure he'll tell us more about that along the way. Today we've got Matt from the world of exchange-traded derivatives and João from the world of over-the-counter traded derivatives, spot FX. We're going to explore the fundamental differences between these two products. But before I get started, I'm pretty sure Matt has a little disclaimer to give out, and maybe João as well.
Thank you. Thank you for the opportunity to talk to you guys and your crowd, and nice to meet everybody on this call. Yes, before we start, I'm a licensed broker, so I just have to tell everyone that there's a substantial risk of loss in futures trading. Past performance is not indicative of future results. This futures is a speculative tool. It is not an investment vehicle. It is a trading vehicle. It has a lot of leverage, and you should use only your risk capital when you trade those kind of instruments.
Excellent. I make my words, Matt's words, mine, and also I'm very thankful for joining this call and to share obviously my view and my business with all the viewers and yourself. It's important to highlight definitely the risks associated to FX trading and CFDs, and it's very interesting content that I think we're going to be sharing here, and I'm more than happy to answer all of your questions.
Excellent. So let's jump right into it. Matt, what inspired you to set up your own trading business, and a little bit of history and background about yourself if I missed something in the intro?
Well, I would say first, that my mentors were really good people in this business. Luckily, I was surrounded by good people who had good intentions, and they taught me many sides of the business. They taught me from trading and margins and technology, and I was also on the margin side, which helped. I worked with compliance people, which helps, when you're a regulated entity. But at a certain point, just like every other business owner out there that went independent, I had my own vision of how I want to help my customers. Specifically, when I would say that around the time that I went, that I established my introducing broker, the world started being more and more and more electronic. More customers came and traded online. I started in the world of broker assisted, where people used to call us and place orders. And I was in my late 20s at the time, but that changed really fast when the Chicago Mercantile Exchange introduced for the first time the E-mini S&P product. And when I saw the speed of execution and everything else, I was very fascinated by it. And even during the time that I was working with others or for others, I saw the vision that I want to have for my firm. And I just decided to go independent and fulfill it, And again, I'm thankful to all the people that were in my past that helped me together, and I still have a working relationship with them.
There we go. João, same to you. What inspired you to set up your own trading business?
I believe that my past experience with different Forex brokerage and also banking, where I've started initially back in 2008, I think that there was always my understanding of the businesses were always blocked, let's say, from different perspective of different reality of where the brokers were based, or different understanding of the needs at that time of each brokerage. And I felt that I had my ideas in place. I understood obviously the market from few years ago, and the needs that I wanted to provide to fulfill, let's say, from my clients, and I felt that it was the right time to set up something with my ideas, with my concepts, with a kind of offering that I was being asked, and I felt that there was not yet fully accomplished with the brokers that I was working with, and I felt that why not to start something with the concept, with a fair pricing, with a fair offering, with the right support. That I felt that is always my one of the most important points that my brokerage covers, and I decided with a group of colleagues that were also in the same mindset to start something with a different approach, and we are at that time. Also, is important to highlight that there was quite a lot of restrictions at that time when ESMA implemented, obviously, the restrictions in Europe on the leverage and the way the brokers were able to package their products. And so this also made us took the decision to start this brokerage with a more flexible approach from the Cook Islands, where we are most of the time.
Well, it sounds like you both started your business with a client perspective in mind, which is oftentimes really far in the distance, considering the markets are really difficult, and oftentimes the little guy thinks that the deck is stacked against them.
Yeah.
Do you guys want to comment maybe on how you make things better for the client, or you both mentioned a client focus or perspective? So I'd like to maybe just see what is the secret sauce that helps make you guys client centric and client focused. Matt, take it away.
Sure. So, I understand and respect the challenges that new traders have. First of all, they're overwhelmed. You would think that because of the internet and the amount of information on the internet, it would make a more educated customer. It actually has exactly the opposite effect. The customer is overwhelmed with facts. Everything goes on the internet, whether it's truth, whether it's lies, whether it's facts, whether it's not. So they don't know where to start and where to begin. My job, the way I see it, is first of all to make things simple and to break down the simplicity of my product. The second thing is, there's also a side of fiduciary duty that you have to tell a customer, you have to educate them about what they think is, they have a certain natural inclination. For example, they have a drive towards a very high leverage. And you have to tell them at some point, listen, leverage does not make you a better trader. More frequency doesn't make you a better trader. So it's this transition that we try to basically go from beginner, to more advanced. We try to give them all the steps along the way to help them out. We do it through platform education. We recorded every single platform out there. We record and we show them how to use it. We have a community that we have a community site, community.optimusfutures.com, where people can go in and ask questions and get educated. So, we try to basically bridge the gap that exists in their head as beginner traders, right? Because again, I feel bad because they're beginners. They're overwhelmed with facts, information, products. And in the world of derivatives or futures exchanges, there's a lot going on. There's certain leverage associated with certain products, times, margins, day trading margins, overnight margins. So you have to basically explain those components to the players and show them how to use it. Now, I think once the customer knows the rules, once he understands how things work, he could take better decisions. So our goal has always been to give as much information, practical information, not just any information, practical and pragmatical information that I can give to the customer, and then he can make his own decisions and decide how he wants to trade.
Yeah, a few things you mentioned. I'm reading Bezonomics right now, and they say that one researcher did an experiment where they brought 3 jams and someone had to pick, and then people were buying a lot more jams when they had 3 options. But when they gave them 20 options, they were selling way less jam because it was just too difficult to make a decision, and people just got fed up and went away.
Well, it's the same experiment with the wine in the supermarket. You put 2 wines, people go and taste it, right? It's this one or that one. You give them 20 wines, they walk by. So people are overwhelmed, with information now. Even when they get to the point of trading, even if they open accounts, it doesn't mean that their education stopped. Our industry today is moving at the speed of light, and you have to provide the right technology to people at the right time, move along with the industry, and at the same time explain, what it is, the process that it goes to. Let me give you an example, okay? And it might sound a little bit funny, but the first online trading, okay, it was online trading. A person would go 20 years ago, would punch in an order. It would still go to a clerk on the desk who used to call someone, right? That was online trading. Today, it's directly to the exchange. So speed became a major factor in execution. The speed of your trades is major, the stability. And then customers have to understand that, based on the speed that they have and what they compete with, they have to choose their strategy accordingly, right? So there's always those challenges, not only when the customer comes on board, but also when he's a customer, continuing educating him all the time about what's going on without him being overwhelmed. So.
Yeah, it reminds me when I first started in my first brokerage, we had I probably had thousands of phone calls where I helped people just understand how to place their first trade on everything, and the educational aspect was just huge. And I guess throwing it over to João, there was over probably in 2013 there was probably over 3,000 MT4 brokers listed on Forex Peace Army. Now maybe there's 1,500. How does one be client focused and really get the message out and differentiate?
It's really difficult. I think people are overwhelmed with all this information, as Matt was well saying. I think it's not only that, is that the way that brokers have been packaging their offering in a way of copying each other, from the user perspective, made it to almost to create auto mechanism of filtering this information, not only in the broker's website, but also on social media, etc. It's been so much of the same content, and also in this fast-paced world where people are much more in need of a fast information and a fast way of solving their problems, made it exactly difficult for a broker just to believe that just ticking all the boxes would be the way of making business. It's not that anymore. I think now in this world people need a decision and information fast. They need it clearly. I think that brokers were able to create new tools, new ways of presenting information, new assets, new different ways of trading, like social trading, etc., which also been growing massively in the past years. And I think this is the way the business and the market is going, because people need this information fast. They are not so open now to spend hours and days reading information which they prefer to find ways of investing and diversifying their portfolios. And this I think it could guide us to a different subject of this conversation, into the fintech and so on. But I believe that it's exactly that. I think it's people are looking for new ways of investing, and this needs to come always with the new innovation also from the broker side.
Yeah, sometimes it just feels like whoever has the most money to spend on marketing is going to be at the front of people's minds, and it's just easy to make a quick decision like that.
The big market, the big marketing, it can create the brand initially, but then it's difficult is to keep it there. To keep it there, you cannot do it just with the marketing. You need to do it with a very good service, with a very good offer. Otherwise, they will know you, but then they will end up knowing you for the worst reasons.
Yeah. Well, let's get into some meat and potatoes about different instruments and products. I'm going to throw this one to Matt. Can you explain to the CFD traders that are watching what futures and options contracts are?
Sure. Before I go there, I do agree with you, Michael, about the advertising aspect of the industry. I find that a lot of our customers that come to us from other brokers. But when they mention the name of the brokers that they're actually coming from, are the ones that actually, are the ones that do spend a lot of money on advertising. So they have become not only a brokerage, they have become their own advertising agency, with their own internal marketing inside, their internal ROI. So, my perspective is let them spend all this money, because at some point, when the customer becomes just, slightly more educated, if the terms that they're giving him are not right, he will start looking elsewhere. And we end up with this business. The good brokers end up with this business. So like João said, you can't keep a customer just basically on your spending dollar. But for sure, spending dollars brings them the masses. So, it's just wanted to emphasize that. To your point, futures trading, the question, futures are exchange-traded products. I'm not going to get into the complexity of everything, but they cover everything from stock indices to oil, gold, currencies, meats, grains, and everything else. Every product is standardized. It has its own hours. It has its own delivery time. It has its own operations. But again, what's common to all of them, just to keep it short, and not going into too much detail, is that they're all exchange traded products. So you basically, when you place your order, it goes to an exchange, and literally you exchange an idea with somebody. So it's not only an exchange from a perspective of exchange regulatory, but exchange like you think that there's long and there's somebody that is short, and they basically, put trades and they trade against each other.
So everybody gets matched up. So I guess when someone goes to put a futures trade in there or an options, I guess futures and options are different. So a futures trade is someone's looking to see something in the future, and they're either betting it's going to go up or it's going to go down.
Well, the reason that it's called futures is because it's reflecting future prices. All prices fluctuate. At the end of the day, every financial instrument, you're betting on the direction of the instrument. Options are a little bit different, but futures, you're just betting on the direction. So futures, for example, you have different months that might reflect different deliveries. So you can trade June of this year or June of next year. Of course, the liquidity will be different in that month, but essentially you're betting on the prices to go up or down. Every instrument you can go long or short. It's the same margin for long and short, just like OTC products. I think Cfds and Forex work that way. You have long and short. And basically, that's it. It's just the exchange is I think the exchange itself is really the distinguishing factor for regulated futures market.
Why do you think the exchange is the distinguishing factor?
Because I think that, it's just mechanically, I believe that OTC products have their own market makers, their own banks, their own everything. So different brokers work with different suppliers. We have one exchange for each product. So, for example, if somebody wants to trade the micro or mini S&P, they go through the CME. If they want to trade the if they want to trade, for example, the German DAX, they go through the Eurex. So if you're asking me if the exchange makes a difference in terms of between OTC and everything else, it makes a difference because it's a regulated body. So they have to operate in a certain way for the player to be fair to the player, speculator, hedger, or anything else. So they also have their own rules that they have to obey by, that they have a certain level of obligation towards, the players in the marketplace. So that's, I think it helps. At least, here it does.
What about like Robinhood? That you can do everything with Robinhood, but so I guess same with interactive brokers. You can do the same with trade futures, options. You got everything with each of those.
Again, listen, I hope one day to get into the equities market, because everybody's getting into the equities market. So it's not a market that I want to miss. But I've listened to the hearing, that they had about Robinhood, when all this GME thing started, and apparently, okay, and I could be wrong, but the market, you do not have to go through the exchange when you buy stocks. I think stock options have to be traded through an exchange, but you have certain market makers, I believe, that in the equities market can act as a counterparty. That was my understanding, at least, right? So I don't know specifically, again, about equities. I would tell you in the futures market, it has to go through an exchange, right? I cannot go to a separate supplier outside the exchange and do an E-mini S&P. It's a registered trademark. The name is there, and exchanges own the name for that product, right? So that makes a difference. All those variables, I think, make a difference for the player.
Got it. So I can only get my George Foreman through, an authorized dealer.
Yeah,
kind of.
I guess.
Only seen on TV, as seen on TV, right?
Exactly. I mean, the exchange does have competition once in a while. People try to come up, with different products and similar products, but the CME is such an established, exchange, and it's been around forever. And there used to be 4 different exchanges, right? There used to be the CME, CBOT, NYMEX, COMEX. Now it's all under the CME group. So that's basically, and so competing exchanges that come up here and there with products, it's very hard for them to compete with that body. I've seen people come up with other products that they try to, but the liquidity is just not there. The CME gets the majority of the business in the United States.
And I guess I'm going to throw this one over to João. Can you explain to the futures and options traders what a CFD is?
Definitely. So the CFD is nothing more than an arrangement or an agreement between an investor and the CFD broker in terms of the difference of a price of a financial product. So comparing CFD with futures, as we were saying, here we are not. The client is not owning the underlying product of this financial product, but just the trading and buying or selling and benefiting from the price change of that asset. There are a few differences, I would say, between the CFD and the futures. I think the most important ones are definitely in terms of holding this asset or not. Here we are talking about a CFD. We are just taking advantage of the fluctuation on the price, not holding the physical asset or the commodity, for example. And there's no expiration price. So basically we are trading over the counter, not on a regulated exchange. We are just trading the price and the fluctuation of these assets over the counter. So this might represent maybe more risks from the client perspective, but also more flexibility, because we are talking here, especially for smaller investors. CFD allows you to divide and to buy and sell in smaller portion, let's say, of a specific asset, because you can open a 0.01 lot contracts of a specific asset, so it's way more flexible. On the other hand, I think that here we are always talking of in terms of the ownership, as I mentioned, trade sizes, expiration dates. Asset classes is also an important point, because I think there are less asset classes in the futures. CFDs covers way more classes such as ETFs, indices, currencies. Now even cryptos, etc., is now the placed available via trading platforms to CFD traders. So I think that is a much more flexible instrument for a client, especially for smaller investors, retail investors. But on the other hand, there's less control. There's more flexibility for the broker as well, in the sense that there's brokers who can internalize and can do obviously some booking and control always the flow of all these trades internally. So there's the flexibility versus the less regulation, let's say, of a product, but it will give you a much wider range of assets to trade, and so it's I think it's a nice way in terms of distributing your portfolio into different asset classes in a much flexible way.
I was always curious how like market makers kind of cover their longs or their shorts in terms of CFDs. In terms, do they have to go and buy the asset, or how do they cover for that?
Because you can do that even with the CFD with the price, because you get the liquidity also on the CFDs from your prime brokerages or different liquidity providers that you might have. So from a broker's perspective, brokers are always able to control the flow and to manage the risk internally. Either is a CFD, either is FX, either is different assets. How do you say it? The fact that there's no expiration date makes it easier as well for a client, because an issue when you have a future is obviously you have this specific timeline where you will be able just to close a specific instrument at specific time in the future. With the CFD, you can roll over your position for a longer period. So there's this possibility for the client to diversify into a more wider range of products.
I guess I kind of like if a retail trader was shorting a CFD versus shorting a stock, I think with a CFD it allows them to only lose the money that's in their account, but if they're shorting a stock, they might lose their house. So
I think this is also a very interesting point, because I believe practically 99.9% of the brokers have exactly the negative balance protection. So at the end of the day, you are risking what you deposited. So there's this not advantage, but at least peace of mind on that aspect. But yeah, it's I think here you might have the possibility to, especially the CFDs with indices, for example, you have I believe lesser swaps in order to keep your positions open, which also can be a beneficial if you have an idea and you are trading long term and you expect the market to go in a specific direction. You are able to keep your position longer in the market, waiting for that market movement. So all depends on what is your trading strategy, the way you like to operate. Also, if you are a smaller investor, it's very difficult to enter into the futures because of the contract size. Because if you start even with the trading $1,000 position, you might be quite exposed if your account is not able to keep that positions open. So here you are able to distribute the risk in a smaller lot size and also benefiting from the leverage and so on.
Nice. I guess from throwing over to Matt, what's the worst case scenario or that can happen to a trader in the futures or options markets?
Well, João was right. In futures market, theoretically there is unlimited risk. So basically, you can lose more than your initial deposit when you do that. What we try and do, is explain to the customer is the amount of leverage that they take will be a big factor in that, right? So essentially, the more they leverage, the higher the risk. To João's point, about the sizes, what we saw, and I'm really happy that it happened, that, last year we had the launch of the micro indices, the micro E-mini S&P, the micro NASDAQ, micro Dow, and micro Russell. And that really allowed the smaller player to come in and play with 1/10 of the size, which is smaller. Now, again, I'm not downplaying the risk that exists in futures trading, but the notional size of those contracts has substantially contracted. And the volume on those things is huge. So we saw a huge influx from people that are trading, potentially in Europe and over the world, OTC markets, moving to this market as well and diversifying into it. I believe that in the months to come, Eurex, which is the German exchange in Frankfurt, is also coming up with a micro contract for the DEX, which I also think will be, very good in terms of giving the smaller customer, the potential, obviously, to participate in a smaller way, not assuming the big risk of the larger contracts out there. So, I hope this is just one way of helping the smaller type customer to trade in a liquid market through the exchange, with a smaller notional size.
Yeah, let's give everyone access to the markets. Let's go to the next topic. Matt, you help traders set up data feeds and platforms. Can you explain where prices come from and how execution takes place? Who's the counterparty in the trades?
So, well, again, everything goes to. I'll try to go through the process a little bit in a simple way. So when a person opens an account, all our trades are direct market access. So they go to the exchange, right? So a person executes a trade, it goes to the exchange. In between, there's supposed to be a risk parameter that actually checks customer X has this much dollars, this is how many contracts he can have, and then it goes directly, and the process takes milliseconds. So it goes directly to the exchange. And basically the trade is booked through on the exchange. The reports are coming through the clearing firm. Some of the clearing firm are called clearing FCMs. Some of them are called non-clearing FCMs. Clearing FCMs have a membership on the CME. Non-clearing firms go through somebody, typically in the form of an omnibus account with somebody that does have a clearing on the exchange. And basically that's the customer gets a statement that reported on this platform, just like any other instrument. The exchange plays a huge role in the risk mitigation, and the clearing firm plays a huge role. Clearing firms are required to have all the margins for overnight. So obviously, if a customer doesn't have it, they'll have a margin call. But at that point, the firm puts up the capital most of the time, to maintain it. And usually they have a certain level of excess capital that they need for their operation for that reason. But the exchange also plays a huge role, and it will act as a counterparty just in case that somebody cannot participate. So that would be, basically the process of the trades.
Nice. And for João, where do Forex and Cfds brokers like Forexc get pricing from, and how are trades executed?
Sure. So we cooperate with the pool of different prime brokers and banks, which we aggregate and we combine, and we take advantage of the best possible liquidity from these different providers, and we aggregate it into our trading platforms. So we try to provide the biggest possible top of the book on the different kind of assets, exactly to avoid any kind of slippage, any kind of difficulties with the execution, and also to offer the best possible conditions for bigger ticks, bigger trades for those who trade larger larger volumes. Our focus has been always clients with in terms of scalping, in terms of any kind of trading strategy. We are more than happy to receive them, but exactly we focus on STP model, so we focus in increase as much the volume as possible, and this is for that. We can only do that when in fact we have a very good execution. In terms of latency, it was always our priority number one as well. So we do work currently with Equinix in London in terms of servers, in terms to minimize the latency of execution. So we try always to keep it below 40 milliseconds at all times. So our idea is always to aggregate all this liquidity from the different reputable prime brokers, exactly to be able to accommodate and to provide the best possible trading experience for our clients. So it's there's no big science behind it. It's just a matter of finding the right counterparties, the right partners, and to have very good communication, because there are many issues that we find along the way, as normal with any brokerage. Either is related to the execution, either related to their servers, either related to a disconnection of the bridge, or something that sometimes is not from our end, but is from the liquidity provider's end. And this can only be fixed and solved quickly and with the less impact for the clients, always when there's a very good communication channels with all these parties. So and this is always our focus has been always in making the experience the best possible, controlling all these bits of the flow from the moment the client presses the button and the trade goes to the market.
Yeah, because anytime a trader, pricing stops or there's a bad fill or anything like that, that's the first thing the traders do. They think everyone's against them, and just kills a reputation.
But that's normal. Me and myself, I was also a trader. I'm still a trader when I can, not with Forexc for regulatory reasons, but obviously I like trading, and I'm a trader myself. And these kind of things are always the first question that is raised is what's going on. They are trying to take advantage of my small capital. So it's always the first question. So it's understandable. But this, if you have a good support agent able to clarify, we keep our clients on the loop of any updates that are happening in terms of technology, in terms of all the service that we provide. So we try to keep our clients always on the loop of any changes, exactly to avoid misunderstanding.
João, you also mentioned your execution model is SDP,
yes,
and it's definitely like in the favor of clients to make sure they get the best execution and fair execution. I guess, do you want to maybe describe a little bit more about what SDP execution is and the other types of execution models there are in the industry?
Definitely, I can go over it. It's in terms of STPs, is just a shortened of straight-through processing. There's nothing more than whatever client requests in terms of trade, the same trade is passed to the market and to through the liquidity providers we have. So it's just we are just an intermediary without intervention, let's say, of any trade. So the client benefits from that pricing, from that price, and from that fast latency execution in order to place their trades in the market. There are different kinds of execution. There are obviously those who like to run the risk internally, to control the flow and the exposure on each instrument, and then pass it to their LPs as they feel it's best. So they have their own dealing desk, which is able to understand the flow and where the market might be directing, and then internalize this flow from clients, and then evaluate which trades will be considered an advantage to send to the market or not. We try to avoid thinking too much about that. We send it to the market. And for us, it's a peace of mind because it's obviously for us, we are in the same line of thinking of the client. We are in the same boat. We benefit from each trade. So client trades, we get our share of the spread, and that's it.
Yeah, and you manage your own investment funds as well, so you better be going to STP, right? So you
exactly. No, yeah, we do. We have other businesses that are complementary to the brokerage side, and it could only work that way.
Yeah. Well, Matt, you offer traders more than a dozen different platforms. What's your opinion on the idea of one platform to suit many traders, or how do they pick?
So, because the futures market is an exchange traded product, you have a lot of pipes to the exchange. Okay, so there's a lot of vendors that provide a pipe to the exchange, meaning a line to the exchange for execution. And because of that, they all offer also on top of it their own interface and their own platform. I would say this, okay? This is my general view. I think that I would say that an average trader, even the most sophisticated trader out there, somebody who's been doing this for a long time, may use, I would say, 10 to 15% of any given platform as far as features. Buy, sell, buy, stop, sell, stop, whatever orders, trading from the charts, depth of market, or anything like that. It really boils down to the same needs. I understand that, it gets a little bit overwhelming as far as which platform to choose, but you also have to understand that all the platforms that are offered don't have that many. Like, for example, we do not have that many providers on the back end. So the interface can be called X, Y, or Z, but they would usually go through a number of data feeds that have pipes to the exchange. We'll go through the bigger ones like CQG, TT, and we have also smaller ones, for example, like Rhythmic and others that we use. Well, Rhythmic is not that small, but maybe not as known. But it's very fast and the technology is really good. So essentially, there are players out there that might require a certain feature on a certain platform that they say, okay, I need this specific feature, and we match them with that feature. I don't think there's anything wrong with if a brokerage firm offers one or two platforms. I don't think there's anything wrong with that because, again, at the end of the day, people don't use all the features out there. When beginners approach the business of trading, they think that the platform will make a big difference in terms of their success. What I usually tell them is that they can start almost on everything as long as they have all the orders executions out there. So in order to help our customers, we launched, a white label platform that it's our own. And we cater and we try to get people to trade on that. It's called Optimus Flow. That has basically all the things that traders need, right? It has a DOM, chart, execution, reporting, fast execution, and everything that they may need to avoid that looking at 50 platforms and saying, what do I need? So in our world, it's a little bit more difficult because those platforms they're also marketing their platform. So they always say, use mine, use mine, use mine, right? But here's what I tell people. You can start with literally a free platform. Sometimes they're sitting there and they're saying, what should I choose? As if that's going to make all the difference in the world. Once they trade for a year on one platform, although the people don't like to switch, I believe that they can move on to other things and they discover along the way features that they need. Many times, even the broker adds those features if it's a customer who's large enough. He says, I need this, I need that. They will work with programmers. In the case of MT4, MT5, tons of programmers. In our case, it's a lot of C# platforms. So basically, they add it. So again, the back end of the platform it's 2 to 3 suppliers. The front end, we just tell them, what do you need? for your trading, trying to minimize as much as they can to execution. And this is what they should focus on, right? They think, again, amateurs think that if they have 3 platforms, 2 data feeds, 6 brokers to choose from, and they have 9 screens, that makes them a trader. No. You know what it makes them? A person who's fascinated with trading, who stares all day at the screen and does not place any trades, right? That's that. And so it's like they're frozen. So I just say, at the beginning, just choose something. Go like this, right? Go like this, and I'll tell you if it's okay or not. I'll help you, or just use my platform, and because I know it really well, and that's basically it, right? So it's important to move a person from a state of, when it comes to technology and of execution, of I don't know what to do, to give him enough confidence to say, listen, just learn the order execution. Look at the charts. Look at the DOM. Once you're comfortable with the interface, that's it. Now, one thing I would say finally, about this topic is that sometimes the visual appeal makes a certain difference, right? Some platforms look completely primitive, but they could be very stable, right? They could be very stable. So somebody would say, I like the features on this platform, but it's not very modern. And we say, yes, but it's stable, or it's not that stable. When it comes to our platform, to Optimus Flow, I tell them, look, we actually focused on the interface design. So the customer, when it comes, everything is available. The chart, depth of market, execution, and the positions. Those basic things need to be there, and controlling their positions, knowing exactly where they stand. Also having a panic button. They don't know what to do. They know exactly where to press to get out of everything. Market meltdown, know where the panic button is, where you flatten all your positions. Those are the things that are important. So the focus should be, when you look at a platform from a risk management perspective, not thinking that I have to research for a year, what platform there is. Because again, I don't think it makes a huge difference in the performance of the account in the long run, as long as the platform is stable.
There you have it. What to do about a platform. I'm going to throw it over to João. In the FX and CFD industry, predominantly it's been MT4, now it's MT5,
Yes.
controlling the whole industry with all the different brokerages out there. How does one platform cater to the needs of so many traders and been able to stay around for so long?
I think it's I personally myself, I don't like MT4. I'm open on that. But at the end of the day, it's what everybody uses. And when this happens, as Matt was saying, is the reliability of a platform, because MT4 and MT5 are in fact an old school type of platforms, which everybody uses, but also is a kind of platform that you find content, information in every kind of media channel, any kind of user or trader knows and have content about it. I think that the fact that it's in fact a reliable platform, because there's people are used to it in terms of opening, closing trades is relatively easy. There's a lot of information about that, and also is the possibility of drafting lines of codes in terms of indicators, in terms of expert advisors, in terms of all kinds of tools that you might need in MQL4, MQL5, which are languages which been in the market for so many years, where people always have some kind of content that can help them on their trading. So this information, the way that people are able to access this information in a much better and faster way, makes it the choice, because people are overall and generally speaking taking always the easiest option. There were in fact platforms in the market which, in my opinion, were better than MetaTrader 4, but they were not able to succeed, and they end up closing it, because it's not only a lot of development needed to have a proper stable platform, but is also the information, how easy it is to explain to a trader, exactly in terms, especially those who like charting, etc., to have more information in that regard. I have a lot of clients right now, and I'm always very open on these kind of things in terms of names. I'm not publicly being sponsored by anyone. Let it make it straight. But I have a lot of clients which they follow a lot charting tools like TradingView and many other tools that are in the market, which are in fact helping them to analyze the market, and then they just press the button on MT4 because it's their broker's trading platform. So I think that concept of having everything into the trading platform, I think we are leaving a bit that part. I think people are using much more tools outside the trading platform for their own analysis, and then just use the platform just to trigger the trade. So this is the way that market is heading. Also, we are adding a much more wider range of assets, which MetaTrader 4 is not able to accommodate, and that's why brokers are now adding MT5 as well, exactly to have a wider number of groups, instruments, assets, etc., to accommodate as well all these new stocks and so on. On the other hand, they cannot get rid of the MT4 because people have, as I mentioned, their tools, their expert advisors, their indicators, all that mechanism tools that they were using since they know themselves as traders, which they cannot, some of them, they don't know how to convert it to MTL5 and apply it on MetaTrader 5. So it's in fact, people are used to it. They don't want, people are the resistance to change is enormous, and when it comes to something that deals with money, it's the resistance is even higher.
Yeah. I guess maybe switching topics a little bit. Matt, you've been, I guess, going back to a little bit what we talked about earlier, you've been following the game Stonks and Robinhood's story pretty closely, watching the Senate hearings and sharing updates in your podcast. What surprised you most about the situation, or didn't surprise you?
Nothing surprised me, and when I say that, it's not that I had the ability to predict what will happen or anything like that. I didn't know about, I didn't hear about Wall Street bets up until a few months ago. I didn't I didn't know about GameStop as a stock. But if you start breaking down all the components of everything that happened, everything just took place in a different medium. Let me give you an example, right? So they're saying GameStop was just this bubble that was inflated. Okay, so let's go back 500 years to the days of the tulips in the Netherlands, when there was a flower at some point that traded, the price got to a price of a castle, right? And that was speculation. That was before, I'm sure you heard of the tulip, right? So,
Yeah.
the tulip hype. Okay, so there was no Twitter 400 years ago. There was no Reddit. There was nothing. If you look at recent history, just let's bring it a little bit recent, not that recent. We weren't alive at the time, but the crash of 1929, when everybody was on stocks, crash of 82, the dot-com crash. So essentially the medium has changed to a forum, so people, before they were discussing it at work, one-to-one, it just moved to a different podium, but that podium is much larger. The podium is much larger, right? That's what it is, right? So, the problem that we have in the industry today, in every single industry, is that people coming to us misinformed. They're coming to us misinformed, whether it's in Forex or whether it's in futures or any asset class, right? So when you have such a large podium of people talking, clearly it will attract a lot of people who are trying to, I don't want to call them greedy, but they're really trying to capitalize on what's going on. And they have, the syndrome of FOMO, fear of missing out, right? So do I think this is surprising that it happened in the days of people putting Lamborghinis on, on from trading, from Lamborghinis on Instagram and Twitter accounts and everything else? It's just ridiculous. It just, it has become ridiculous of what people promote out there as trading, and so the direction was there long before that. The direction of this happened before that with all those promotions. People who were innocent enough, not understanding the risks of the market, fear of missing out, all this talking, combined with, a brokerage that promotes, no commissions. So all those variables and components together, led to this. But again, if you break down every single component, you will realize that, those things is just taking place in a different manner. So in the .com, you used to call your broker and say, buy me this .com, even if it had negative growth. I want to go in. Everybody's in it. That's what it is. That's how bubbles usually look like. So when this happened, I didn't look at it and I said, oh my God, this is so different. No, it just took place in a different medium, in a different format. That's all.
I guess, João, people, looking for the forums for an idea to pick a stock or make a trade. How's the evolution of copy trading kind of taken off, and what do you think about that?
No, as we started this conversation, it's something that I believe it's the way that this market will go, exactly because people are less open for learning. Also, this fast pace, the fact that now everybody is still digesting all these changes of habits that drive from these lockdowns and this post-COVID experience, let's say. I think people are looking more actively for alternative investment solutions, and this people prefer to have and to follow someone who's been trading with a reliable and verified track record, which can be easiest way to start the market, to try to understand what the person or the trader is doing, and just pass that responsibility, because trading is, in my opinion, the mental pressure and the psychological part of the trading is extremely important, and not everyone likes to be stressed daily in front of a computer looking to the markets, and even though they have the knowledge, they don't like to take that pressure. So this removes that pressure away. The automated trading, the algorithmic trading, the social trading, the copy trading end up to be the solution, the easiest solutions for those who want to have a contact with this kind of products, that they don't want to take the responsibility, and eventually, if the things go wrong, to deal with the pressure of I just burned some money, which is definitely not a good feeling. So I think people prefer to find a more stable solution that can also give them that extra level of income, because if we are looking to what were the normal investment solutions back in the days, where people were still depositing their funds into banks and just keeping some of their funds into a savings account, now that world is gone. Banks are charging negative interest rates, so people are in fact looking, let me do something with my money. Let's try to make it something, because I don't know tomorrow what's going to happen. I don't know under these circumstances with COVID if I have a job. So people are, I see it, I feel it with Forexc overall, that people are looking more into trying their luck in finding ways of maximizing their income with trading, and I feel that those who don't want to take their responsibility, they just give it to someone else, and it's a fair way of doing it.
Well, I think we're almost running out of time over here, but I kind of want to leave it one last point. You both have seen probably thousands of traders, millions of orders. What kind of makes up, what are things to do with trading? What are things not to do with trading? And then how can people get in touch with you and get in contact with you? Let's leave it at that. Matt, take it away.
Okay. So first of all, to Joao's point and everything, I agree with many of the things that he said. The one thing we could all agree that, whether it's choosing a platform, a broker, or everything else, it's really important to be an independent thinker. The inability of a customer to move from one platform to another and insisting on some sort of a technology that he never even experienced, it's only because he wants to feel that he's part of a group that trades it. So that's why it's very, very hard to trade. Even I believe for MT5, it's really hard to move. I don't think they saw the resistance that will come from all the MT4 people. They're like, yes. I have my 2 indicators that I bought from this vendor for $29, and I've been watching it for the last 5 years. I never made $1 from it, but I'm using this indicator and I'm not switching. So the first thing I would say is, first and foremost, be an independent thinker, right? At some point, you can't follow the crowd. You have to make decisions for yourself. That's number one. Second thing is, understand the leverage that you take on yourself. Leverage is not a gift. It's not a gift. It doesn't, traders think the more leverage I get, the more successful I will be. It's exactly the opposite. At some point, if you're an experienced trader, you can use reasonable leverage. If you're not experienced, you should minimize your leverage until that point where you feel comfortable trading, where you tested your method. And even as a beginner trader, most likely you will not make money. It's very, very hard to make money as a beginner trader. But don't look at the loss of money always as a bad thing, because you know what you do? If your trades are small enough, you're gathering statistics. You're gathering information about your trading, right? You can, if you use small leverage and your losses are not big, you can say, this is what I'm doing right. This is what I'm doing wrong. I can journal this. I see my patterns. When you are all over the place, one day you use leverage of 5x, one day 10x, one day you use Fibonacci, the next day Elliott wave, the other day you're using, some indicator, then there's nothing to follow. There's nothing to track. It's no progress. So you have to be very, very methodical in terms of how you go about it. Trade slowly, learn about yourself, stop surfing the internet for more information. More information at some point does not help you. At some point, you have to start looking at what you're doing and what you're feeling comfortable with and be an independent thinker. Today, I'm at a stage in my life, I do not care what Bloomberg says, what Reuters says, what Wall Street Bet says. I do not care. I don't feel I'm missing out on anything because I know what I know. I feel comfortable with what I know. I cannot study things that I don't understand. So, for example, some people are into statistical analysis. I'm not into statistical analysis because I don't know stats. It doesn't mean that I can't trade. So people have to basically realize, what is my strength as a trader, what I can use and what I can't use, and make it as simple as possible. The most important thing, I think, in trading, for every trader to understand, that making money in the market should not be the primary goal. Making money is a byproduct of risk management. It's like equivalent to somebody opening a business. First, you have to help the customer, right? If you're helping the customer and you have a good product, you'll end up making good money. Trading is the same way. It's a byproduct of your behavior. So when you trade, you have to think about consistency, your method, applying your method, not having your psychology being affected with noise, and just do that. So this is what we try and do and educate our customers all the time. Now, it's hard. It's hard because at the end of the day, both me and João are, we cater to self-independent, self-directed traders. They don't always seek our advice. They don't always care, what we think. They have their own idea. And it's sometimes extremely hard, even though you have the best of intentions, to tell a trader, well, I don't think you should leverage. I don't think you should use that much. They come back with, well, just in case that I need it. And I always ask, what is this just in case? Just in case you're down so low that you're going to go all in with all your chips and try to make it back and then blow up your account? That's the just in case. So, I would say that I'm a broker that does not care, about, the politically correct talk of saying, we're good in service and we're good in supporting customers. That's customers should take for granted. Wherever you go, the broker should support you. What we add at Optimus Futures is really that drive to be a little bit more responsible. I can't always make everybody more responsible, but that's what it is. To get in touch with us, it's optimusfutures.com. Just a little plug, since we're on TradingView, we can hook you up through TradingView, through CQG, so people can trade futures through the CQG data feed. Since we spoke about MT5, we also have the ability, like João said, they're diversifying their assets to MT5 where you can trade futures. Like João says, I think MT5 is so primitive, and MT4, they look like Atari 1987, but it is what it is, and that's what the crowd wants. So, if they need to trade on that, as long as it's stable for them, that's the most important thing. So we can also hook it up through CQG, and that's basically it. So thank you for the opportunity, Michael. It was a really productive discussion. Thank you.
Thank you. Well, let's leave it to João.
No, I completely agree with Matt with all the points that he covered. I think, in fact, it's a matter of finding the right balance of what are the targets and the goals in terms of investment for the client and the trading strategy, because as Matt well said, there's no point in combining 20,000 kind of indicators. They will not be the holy grail. They will not give you the answer. I think that traders, the ones that are more successful, are exactly the ones who have open the trade with 2 or 3 indicators max. So the idea is for you to keep the focus, to keep the ideas in terms of trading very clear, without being affected exactly by the noise that normally comes with all the news daily from the media. But at the same time is to have a proper risk management and know exactly how much are you able to afford to lose, let's say, what is your worst scenario daily, and be committed exactly to that risk management, because if you might lose 1% today, but you might be able to get it 2% tomorrow. So it's a matter of managing your portfolio the best way possible, and not to expect that the market will go in your favor at some time, because maybe it will not. So it's exactly to manage this. Be very careful. This is also very careful always with the kind of offerings that you might have. It's not just, I believe that currently in the market, more dangerous than the leverage, in my opinion, are the bonus. I think not the leverage. You kind of distribute your capital with accounts with different leverage, because the leverage can be tricky, but can also, for those who are giving it a try with an account of $200, $300, there's not much trading you can do if you don't have leverage. It all depends on the size of investment. Obviously, those who are used to trade in futures, etc., we are talking of clients who have a reasonable amount of money in their trading account. So they do not need, in fact, higher leverage. But those who are small micro retail clients trading $100, if they don't have leverage, they are not even able to trade. So on that, I think you can adjust your leverage as your account balance and as you are progressing into this type of investment. Last but not the least, and obviously for me, I'm always suspicious to mention about this, but I think algorithmic trading and automated solutions can be either the solution for your investment or a complementary solution for your investment, because I think you can, in fact, implement your manual trading the way you feel it's best, and you can have a complementary automated solution which might be doing also some extra trading on the side and boost a bit your revenue on a monthly basis. So this is something that I personally love automated trading exactly for the fact that removes our emotions, removes any concerns that might come from a bad day at work or a bad day at home, and can in fact implement that trading strategies that you know, but sometimes you are looking somewhere else and you are not able to take that opportunity. Algorithmics never miss unless they lose the internet connection. So it's also a nice way to complement your trading. From my end, I'm available. I'm as you mentioned, I'm in charge, and I'm the CEO and founder of Forexc.com. Is the domain of our brokerage. MT4, MT5. For now, are the two platforms we use. More than 300 assets available to trade. So very tight spreads. I think those who do scalping might like it. And anything you need, www.forexc.com.
Amazing. Well, João, Matt, I wanted to thank you so much for today. We got a lot of information. Hopefully we spread a lot of knowledge and education out there. Matt from Optimus Trading, João from Forexc. We're back in a couple of weeks with another episode, and tomorrow at 1 p.m. Eastern is Jamie Satley on the Power Hour, and answering all questions related to charting and the markets. Again, thank you so much, everyone. Thank you, Matt.
Michael, thank you for having us. And me and João are gonna send you some pictures because this white wall has to go. So I'm gonna send you some. João is gonna send you some. We're going to make it a little bit artistic for you next time.
Oh, perfect.
Listen, all good. Listen, thank you. Nice meeting you both. It was an awesome conversation. Thank you. I wish your viewers all the best in the world in trading. João, good luck with the growth of your company. Michael, would love to be here again. And thank you again for the opportunity.
Excellent. Well, we'll do something again soon then. Thanks, everyone.
Okay. Thank you, everyone. Take care.
Stay safe. Thank you.
Bye.